Chapter 2, Asset Classes and Financial Instruments. And this is going to be just a list of things in which you can invest. And we'll talk a little bit about the institutional detail. We'll talk a little bit about the terminology. We'll talk a little bit about how they work and the risks and how we calculate returns associated with these things. This is not an exhaustive list of things into which you can invest, but we're going to hit sort of the major stuff. And we'll start with this general classification, short-term versus long-term, and debt or equity, to understand the terminology that we're going to use. And then we'll move on to sort of three broad categories. We'll start with money market securities, issuers types, and some of the pricing rules. Then we'll move on to bonds. We'll talk about the issuers. We'll talk about the U.S. Treasury. We'll talk about basic structure, the price-yield relationship, duration, which is a measure of interest rate risk. And then we'll talk a little bit about corporate bonds, municipal bonds. Then we'll move on to equities, ownership stake in a company, common stock and preferred stock. We'll talk about indices, price-weighted, value-weighted, and equally weighted. We'll talk about the differences and how you calculate these things and what they measure. And then we'll talk a tiny bit about derivative securities. So here is our little chart, and this is just going to give us sort of an introduction here and some terminology about this. So we have debt and we have equity. Debt is a loan to a company. It is a primary claim on the corporation's income and assets. And an equity stake or stocks or an ownership is a residual claim. After the debt holders get paid, then you get paid. The debt is broken up into two categories, short-term and long-term, money markets versus long-term or capital markets. Generally, there's a whole list of money market securities that we'll talk about, and different entities, corporations or the government or banks, issue different types of money market securities. And then we'll talk about bonds, and again, different issuers issue sort of different, there's different aspects or attributes for the different issuers, although the bonds are much more similar in structure, meaning corporate bonds and government bonds and municipal bonds are much more similar than the structures associated with the money market securities. There are no short-term ownership stakes. So ownership stakes are all long-term. So this box is empty. And down here we have stocks, and stocks refer to equity stakes, ownership of the company, and we'll talk about that as well. Just to be clear, the term money markets versus capital markets, just in terms of their common usage, corporations will tend to have short-term borrowing to finance their operational activities and long-term borrowing to finance their capital activities. And so when they borrow in the short term to finance their operations, these are referred to as, well, money markets. But when they borrow long-term, this is referred to as capital markets. Generally, when people say they work in the capital markets, they often work at a bank, and they're distinguishing long-term versus short-term. People who work in stocks tend not to use the term capital markets. They tend to use equity. So just in terms of common usage, people who say capital markets are generally referring to working in bonds in a context of where it could either be money markets or bonds. But technically, the term capital markets refers to stocks and bonds. People who work in stocks tend not to use the term capital markets.